Hey everyone, Stas Manchek here. Today I want to talk about commercial real estate and all the news articles that you're seeing about these big groups like Starwood Capital, you know, REITs, things along those sorts that are filing for foreclosures on their properties that they own, the assets that they own, the assets that make them money, make their shareholders money, all sorts of things. And so what's happening in the real estate commercial part of it today is, the one thing that everyone's talking about is office. So let's talk about office for a second. The office buildings that are in major downtown markets where they've seen a lot of crime, a lot of pushback, lots of people working from home, lots of companies vacating, are in huge, huge trouble. And the reason why is because, unlike the residential side where there's more emotion to purchases, on the commercial side, everything is all about spreadsheets and net sheets and profit and loss statements and your ability to cover your debt, which the money that you make minus your expenses, how much is left over to cover your debt. And that's getting tougher and tougher for these guys to do. And the reason being is, let's look at the Minneapolis downtown market. Crime spiked. People are afraid to go outside. People are afraid to walk downtown. You got LA. You got a huge homeless population downtown. People are getting harassed. There's, poop everywhere from the homeless population because, let's face it, these governors aren't doing what they're supposed to do and keeping the cities intact. And then you have Chicago, same thing, crime. People are afraid to go. People are, early hours, late at night. People don't feel safe going into these markets. So the companies have no choice but to pull out of these big, huge office leases that are 500,000, a million square feet, which corresponds to the owners not being able to pay their mortgages, not being able to pay their expenses that they have. I mean, the expenses are huge on these office towers. And that not only makes sense for, property taxes, insurance, maintenance, personnel, security, all these expenses that go into a, commercial building they're huge. And their debt on commercial real estate, is usually 3, 5, 10 years. And then that starts to reset. And then you need to go out there and you need to get new financing and you need to get new debt to get you back to coverage. Well, if you bought an office building, let's say at $100 million, 5 to 10 years ago, and you were 80, 90% vacancy rates, and now all of a sudden your debt's coming due in one of the worst times, in my opinion, with, commercial mortgage-backed securities are, very tight on funding and what they fund because they don't have a lot of money. Also, what you're seeing is you have debt service ratios, which is, your net number, how much is left over after all your expenses and all your income that comes in to cover the debt. And, most of the time it's 1.25, 1.3, 1.4, depending on how good relationship you have with the lender, what the lender's underwriting conditions are in that sense. So now you have vacancy rates of 50%, 60%. And that ruins your value because everything in commercial real estate is all about how much income it's producing, what the net number is, and that determined by the cap rate that you're buying it for, what the market's trading these assets for. That is what's getting you in trouble right now. So the opportunities that I see right now in office are, and it's not happening a lot in offices that are, first ring, second ring, third ring suburbs, because those guys are still full, because those guys consist of smaller companies, smaller businesses, entrepreneurs, where they need an office space, they need to coexist with each other. That they didn't have a lot of effects of work from home during the pandemic time. So, but the major metros right now are just getting completely shattered with office space. And that reflects too, it's not only office space, it's downtown areas where, where these crimes pick up, everything gets affected. Retail, hotel, flex space, mixed use, all these different asset classes, because if there's not people working downtowns, people working in those areas, visiting those areas, everything gets affected. So that makes it tougher for these guys to go out and raise new debt. So they have to foreclose. Like the article February 13th that I saw in CoStar was from 2 office buildings in LA that were distressed from Brookfield, which is a large commercial holding hedge fund. And what they, it's a $465 million loan that they're defaulting on, which they had the right to go and renegotiate that loan and do whatever, but they figured out that in their best interest right now, because the asset value went down so much, it was just easier for them to take the foreclosure and move on. So when these guys foreclose, they're going to put it up on auction and see if anybody comes in to purchase that at what they owe on the property, and then the cycle repeats all over again. So anyone that's investing in commercial real estate right now, it's that cycle is starting to where people need new debt. They can't afford new debt. So the opportunity is to buy these assets at discounted prices. And when you do buy these assets at discounted prices, make sure that you have a game plan. Make sure that you have the right team with you, the right people, the right banks, the right leasing agents, the right advisors in that group to be able to say, hey, here's what we can buy it for. Here's it in today's distress situation. Where can we take this? Get new leases, get new signings, get more people in there, get more income so we can cover the debt to service ratios and to help this asset grow in value. So, but that opportunity is coming up right now. And then the other opportunity that's coming up too is shopping malls. Shopping malls all over the country have been, turning into ghost towns more and more. And then the pandemic hit, supply chain issues hit, nobody could go out. So these mall owners are having a hard time filling these spaces. And stores come in, stores go out just as fast, and then it's very expensive for a commercial landlord with TIs, which is tenant improvements, because every store has a different, need. Every store has a need for different flooring, different windows, different front, different back rooms, all sorts of things, which becomes very expensive for these landlords. And at a certain point, these guys are willing to drop the rents, give out free rent as long as they don't have to pay any money out, which we've been doing a lot of great deals on, smaller tenants in locations where a business went under after 5, 10 years, 3 years, 4 years, whatever that case is. And, they might not be able to give us a lot of money in tenant improvement, but these businesses that we've been putting in have been super strong. So they have their own money, they have their own banks that they can go to. And we've just been getting super low rates, free rent, discounted rates, all that stuff, which has been awesome for these smaller businesses to go into, which I think in the next, 2 to 3 years, these opportunities are going to be out there, and it's going to give the opportunity for the smaller guy to get into the big, best locations where traffic is, where people are, to be able to improve and run their businesses. The other space of that too is all these new apartment buildings that are being built. And these guys, these projects usually take 2 to 3, 4 years. So they got in when rates were fairly low. So their construction loans are fairly low. But what happens to construction loans is when you get to a certain point in your project, you have to go start shopping for long-term debt to get out of your short-term construction loan. And with these higher interest rates, it's making it hard, almost impossible for these guys, unless they come to the table with a lot more money and, to get a new loan, because the market has changed so much. Rents on, the residential side, the commercial side are starting to, drop a little bit here and there all over the country, depending on your market. Everything, of course, is market specific. So it's making it difficult for these big landlords to get into these projects. The refinances on the debts, or if there's not a lot of money available, the banks will only lend to the most qualified, the people with the most skin in the game, the people that they believe in the most. So it's making it tougher for these newer guys, even if they raised a bunch of money on the outside, to come in and take on these deals. So, and that goes for everything. That goes for hotels, that goes for retail, that goes for apartments, that goes for anything commercial. It's a whole different game than residential, especially because the numbers are so much bigger, and one little mess up could set you back quite a bit, especially with, if you get the wrong tenant in there that can't pay within 6 months after you just paid all this money to improve their space. You paid all this money in commission to the agents. All that stuff is coming to, a big net loss on their sheet. So when they go to refinance, it's making it a lot tougher for them to do that because the income is not there for them to be able to do that. So the opportunities are coming in commercial real estate, but that stuff trickles down, and that stuff might trickle down into the residential side as well. So the focus is always this, and my philosophy has been like this way for years, is get the best possible deal today, because you're essentially buying your profit up front. Don't depend on market appreciation. Don't depend on, some magical unicorns coming and saving the day. But make sure that at the price that you're purchasing these properties today make financial sense at the prices that you're paying. And then once you improve them and get better cash flows, the values will increase by themselves. But don't focus on the value increasing, because we never know what's going to happen in the market. All these things are always bet on that 10 to 15 year game, especially on these bigger things. And then if you can get out early, if the market's great, that asset class starts performing better than the others. And, these big guys are coming at you with, throwing checks at you to sell, then yes, absolutely take those profits and run and go into the next class that's going to be hot the next time. Because in the last 3-4 years, apartments were hot, now industrial, and then who knows what's next. I think flex space has a lot of potential, and then also what has potential is apartments with retail on the bottom, as long as you can get these things for the right price, because everyone always needs a place to live. And with interest rates being high on the residential side, along with the commercial side too, but with the residential side being high, you can get these deals on the commercial side and then slowly curve that, profit margin up, because if people can't afford to buy homes, people are going to need a place to live either way. And as long as you have the right product in the market for the marketplace that you're in, you're going to do well. It might be a tough year, 2 years, but overall, just make sure that you're betting on the long-term game, because everything takes time. Real estate moves really, really slow. And, the opportunities and the profits take longer to commence into that place. So my name is Stas Manchek. Please check out my website and the link down below. If you have any questions, please shoot me an email, shoot me a chat. I'm here to help answer any questions for you. And if you're thinking about investing in real estate, there's, as the great saying goes, the best time was yesterday, the next best time is today. Always have a strategy. Always make sure that you work with the right people that understand where the market's going as much as the data predicts. And we all can't predict black swan events, but just make sure that you have the right team behind you. Make sure you have the right people that understand what's going on. And there can be lots of tax benefits for you. There can be lots of income saving things in these assets that come into place. So if you have any questions, please give me a call. All my information is down below. Thanks again for watching. Please subscribe. Try to bring you as much value as much as possible on this channel. Have a great day.